We can all agree that the bear market is officially over. After all, we're never going to see a $15,000 Bitcoin ever again. Or to see Ethereum at under $1,000? Simply not going to happen. So the real question here is, where are you investing for the next bull market? Now, some people will tell you that Bitcoin is the only thing you should be investing in. After all, that's the OG, it's got the ETFs, and those ETFs are going to change the entire narrative of this bull market. And they're right. Still, others will tell you that no, AI technology is revolutionizing the industry and the way we live our lives day to day. And that's where you should be investing. And you know what? They're right too. Then you've got people like myself who believe that the blockchain technology is going to revolutionize the gaming industry. Well, as we know, more money flows through gaming than it does through restaurants or movies combined. So yeah, absolutely that's where you should be investing. To put it very simply, everyone is right. See, this bull market is going to be a completely new animal that we've never seen before. And it's going to be driven by the ETFs, by AI technology, by gaming, by DePIN. All of these areas are going to have a huge impact on the crypto world. And that means huge opportunities for every one of you. But let's be real. Most of us don't have time to do all the research. I mean, after all, you've got a job, you've got a family, you've got a life. You cannot dedicate your life to learning all of these new technologies that are constantly evolving and then go in and decide which cryptocurrency is right to invest in. Neither do I. And that's why I want to share with you my secret weapon on how to invest in all of these technologies in one single location. And that location is Cassandra DAO. Now, Cassandra DAO has some great opportunities to invest in every area of cryptocurrency that you could possibly want. Whether it's blue chips, AI, DePIN, or gaming, all of them are available on Cassandra DAO. Now, please understand, they offer many different pools with a lot of different tokens. But what's really critical there is the pool manager. You see, for every pool, there are certain tokens that are listed out there, and each one has its own weight within that pool. Now, it's the pool manager's job to decide which one of those cryptocurrencies has more weight than another. And that requires someone who has a constant pulse on the crypto market and is able to see what the next trend is going to be. So picking your pool manager is super critical. This is where I'm going to share with you my secret weapon. You see, my pool manager is none other than Mr. Cyril Keir. That's right. The man you all know and love from our Rags to Riches we do every Thursday at 7 o'clock Eastern. And over the last year, you've already seen his skills. The man has over 20 years of investing in traditional and crypto markets. He's been able to call the dips and the rises in every trend over the last year on Rags to Riches. So who better to put my funds in the hand of to make sure that what little bag I've got is going to grow to its maximum potential? One of the biggest messages every crypto investor will tell you is you have to diversify. You don't put all your eggs in one basket. But the simple fact is, if you're a smaller investor or a new investor, diversification can get very expensive to buy into all these cryptocurrencies. Then on top of that, you've got to monitor each one and know what it's doing every single day. It becomes a full-time job. And the simple fact is, most of us don't have the skills or the time to dedicate to our investment. So that's why I've chosen to invest in these three pools that are all managed by Cyril Keir. But let's do a quick breakdown. Why do we need three pools? Well, putting it simply, there are three different infrastructure configurations we're going to invest in. Now, the first pool we're going to look at is called the Keir Krew Fund. Now, this is the original index fund created by Cyril Keir to give exposure to the entire crypto market. And this is classified as a low-risk index fund on the Polygon mainnet. But how does an index fund work? So when you buy into an index fund, you're buying into the assets within that fund. So this one, being a low risk, is set up to give exposure to all of the crypto world, but also create a safe foundation. Now, as we've talked about in Rags to Riches many times before, anytime money enters the crypto space, it has to go through the native blue chips. Things like Bitcoin, Ethereum, Matic. Tokens like that are going to be the first place that new money goes into. So of course, that's the foundation, and that's where we want to be investing. But it also has assets such as gold and QuickSwap, Uniswap, and Balancer, all the key foundational points of the crypto space. Now, why is an index fund so powerful? Well, let me give you an example here. As you can see in the last 24 hours, this index fund is down by 1.85%. But let's take a look at the assets. Now, if we were to take those funds and we were to put them into Ethereum, we'll say, well, it's down over 2%. If we were to put them into Gains token, it's down 4%. If we were to put them into QuickSwap, it's only down 1.23%. So an index fund gives us the power to invest in multiple cryptocurrencies, but also mitigate our risk. Now, another great thing about an index fund is unlike a meme coin or any other DeFi project, it doesn't matter who bought in before you or sold before you. It doesn't matter how much one person has in their bag versus another, because the index fund has absolutely nothing to do with the other investors. Your portfolio is based solely on the assets within that index fund and how they perform. So it doesn't matter if the very first guy bought into this index fund for $1 million and he sold right after you did. It will not change the price of your index fund tokens at all. Now, one thing I do want to let you know about is there is a buy tax within the index fund. So if you go into the frequently asked questions and you go into what are the fees associated with the Keir Krew fund portfolio, and it tells you there is a 2% deposit fee, of which 1% can go to a person who shares the pool. 1% annualized management fee set by the manager, of which 0.5% is allocated as an annualized fee for Cassandra DAO. So let's take a look at this. If you put in $100 into the Keir Krew fund, that means they're going to charge you $2 to manage that fee. That's it. $2 for a year of management. It's not a bad deal for somebody to keep an eye on our funds and make sure everything is earning. But even better, if you were to use your referral link and tell somebody about the Keir Krew fund, half of that 2% will go to you. That's right. You'll get 1% of every deposit that goes in using your referral link. Now, Cyril set this up willingly, not only because he believes in the index fund, but because it's not going to affect the other holders. This is a way where anybody can get in and start earning, and he doesn't want to create a DeFi project where it's all about the first in, first out. It's all about the hype. It's all about you must do this. No, he wants to give us a safe haven to go in and earn utilizing his knowledge and his experience, and he wants to reward you for sharing the good word to say, hey, here's a great place where I'm investing. Come on in, make some money with me. And it's not going to affect either one of you because neither one of you can wreck the other. So it really does break the money game that we've talked about time and time again on Rags to Riches, and it removes the whole Wild West concept. So that's why I think the Keir Krew fund is one of the most solid long-term holds you could possibly get into in the DeFi space. Now, the second index fund I want to show you is known as the ARB Keir Krew fund. Now, this is classified as a medium risk index fund that runs on the Arbitrum network, and it is, of course, managed by Cyril Keir. Now, the ARB Keir Krew fund moves beyond the foundational investments, and it goes into more the decentralized exchanges. Because as we know, when somebody buys into the crypto space, they're going to first buy the native blue chip tokens, but then they're going to have to exchange those to their meme coin or their DeFi project token. Either way, it's going to be flowing through a decentralized exchange, and every one of those exchanges earns a little bit of fee. Well, we're going to invest in the businesses that move that money around. And that's why we're going to see things like Trader Joe, like Sushi Swap. Then we're going to add on just a little bit more opportunity with places like GMX, which is also a decentralized exchange, but it also gives the opportunity for leverage trading. And with every leverage trade, it's a little bit of fees there as well. So it's taking our investment to the next level. But we're going to toss in a dash of cutting edge technology, like LivePeer. Now, they're the first live streaming network protocol in the DeFi space. So why not invest in upcoming technologies? But we want to keep our foundation solid, and that's why we have tokens such as Arbitrum and Wrapped Ethereum as well, because that, once again, is how money is going to flow onto the Arbitrum blockchain. So we're making gains as it comes into the blockchain. We're making gains as it's exchanged through the blockchain. All of this classifies as a medium risk investment. Now, you're also going to notice USDC down here at the bottom, because part of the strategic investing is we have to take profits. So as these start making significant gains, Cyril is going to move some of those tokens into a stable coin. That way we know once our profits are taken, they're safe. They're not out there always at risk. So you're going to start seeing the USDC value go up in this portfolio because as profits are taken, we want to take them off the table, and that is confirmed gains. Now let's go check out the fees associated with the medium risk Keir Krew fund. So we go back into frequently asked questions. What are the fees associated? And it says that is a 3.5% deposit fee, of which 1.75% can go to a person who shares the pool. So once again, Cyril is going to share half of the deposit fees with anybody who uses their referral link. Now, as you can see, this does have a slightly higher fee, but please understand, the investments within this index fund require a lot more monitoring. It's not like you can just check it once a week, rebalance it accordingly. This is something that's going to have to be monitored on a pretty regular basis. And that's why there's a slightly higher fee. Still well within tolerance, and as always, our funds are never locked in. We can withdraw at any point in time. Now let's take a look at the third and final Keir Krew fund. Now, this one is classified as high risk, and that's because this is the cutting edge technology. This is where we're going to be investing in GameFi, in AI, in DeepIn, and all the infrastructure growth that is coming to decentralized finance. Now, it has a very different investment strategy because this one has to be monitored and rebalanced on a daily basis, at least once a day. And so Cyril Keir is absolutely watching the charts and keeping an eye on this, looking for the next great opportunity, as well as monitoring the investments we already have. Let's go down here to the fund strategy and understand exactly how this is going to work. And it says, if the asset increases by 3x, then 25% of that asset weight will be converted to stablecoin. We're going to take profits. And if the asset increases by 5x, then an additional 25% will be converted to stablecoin. Lastly, if the asset increases by another 8x, then a third 25% of the original asset will be converted to stablecoin. And the final 25% will be held as a moon bag. And that's where we'll be looking at that peak, when to take profit and when to cash out that moon bag. Because after all, as we know, in the new cutting edge technologies, we need to manage our risk very, very closely. And whenever profits are taken, we've got to take them off and put them in stablecoins. Not only does that secure the profits we made, but it also gives us a stablecoin bag to invest in future endeavors. So all the way around, this is a very high risk, but it also has huge rewards. As you can see right here, today alone is made almost 10% profit. For the week, it's 13.9%. This has only been out for a week. So this is still super early to get into, but it is very risky. So do your research and decide if it's right for you. Now, when we go into the allocations on this, we can see we have things such as Stargate, Sandbox, even Cassandra DAO. Now, as you can see, these are low market cap tokens that have explosive potential. And this is why this list can change on a dime. So it's not something I've got time to monitor every single one of these projects to find out if it's going up or down, if I should get in or if I should get out. And that's where I really trust in Cyril Keir's experience and his forward thinking in the crypto market, because he's got the time and the education to go in and research each one of these projects and decide if it's right for our portfolio. Even better, I know Cyril Keir is also an investor in each one of these portfolios. So putting his own personal money on the line within the exact same protocols that we're all investing in. To me, that's a huge bonus. But let's go take a look at the fees that are incurred for the high risk fund. So if we go back into the frequently asked question, go to the fees associated. Now this says this has a 5% deposit fee, of which 2.75% can go to a person who shared the pool. So it is a little bit higher fee, but please understand this is going to have to be monitored 24 hours a day, 7 days a week. And it's got to be able to be changed and redistributed at the drop of a hat. So that's why there's a slightly higher fee, because this does require so much work to make sure it's profitable for all of us. Now, one special note I do want to share with you about the high risk fund is if we go over here to the overview and we scroll down the token description, it does say we recommend using USDC or USDT on the Polygon network when depositing into this specific fund. I tried doing it on Matic and I ran into an error. As soon as I switched it to USDC or USDC, had no problems at all. Now that we've done a complete breakdown of all three Keir Krew funds, some of you might be wondering if I invested into these protocols, and if so, how did I break it up? Well, I utilize the same strategic investing principles we teach every week on Rags to Riches. So on these specific funds, I put 40% of my bag into the low risk Keir Krew fund. I put another 40% of my bag into the medium risk Keir Krew fund, and I put 20% of my bag into the high risk Keir Krew fund. Now, this is about the time where most influencers would say, hey, you've got to jump in here with me right now to make gains because we're going to get rich. We're going to go to the moon. You know what? I'm not going to say that, because simply put, I don't want you to just jump in because I said so. So click on the links below, learn about the Keir Krew funds and understand them, how they work, and if they're right for you. And if not, that's fine. Either way, I'm within them and I'm making solid gains. I like where I'm at. But if they're not for you, that's okay too. Do me a huge favor though, if you've enjoyed this content, make sure to hit the like and subscribe down below, because I'm going to keep bringing you the best information I can. Now, if you want to learn more about Cyril Keir and the Keir Krew Fund, go watch this AMA where I grilled him for over an hour, asking him some of the hardest questions you can possibly imagine. Or if you want to chat to him live, make sure to tune in this Thursday at 7 p.m. Eastern for Rags to Riches, where we're going to cover all the best crypto information of what's going on today and what to look forward to in tomorrow. So I want to thank you very much for your time. Until next time, have a great night.